The most likely reason why you are currently either losing money as a trader or struggling to create profits over time is because you don't have a good strategy, or maybe you have a strategy but it's too complicated for you to know exactly when to enter the market. So what I want to do in today's video is show you the simplest and probably the best strategy that you can start using to make money trading Volatility 75 index. And I'm saying this is the simplest and the best simply because, number one, this strategy is very easy to use. Once you know how to identify the trend, you are going to be able to trade this strategy. Number two, you only need to know how to draw a trend line, and also this strategy have got a huge risk to reward ratio. So I'm just talking about the trend line break strategy here. So we talked about this strategy a little bit in the previous video where I was teaching you how to grow a small account, but maybe you didn't get exactly how this strategy works. So I'm going to show you in this video how to use this strategy. So as I said, with this strategy, all you need to do is to know how to read a trend and draw a trend line. So how do you read a trend? To read a trend, simply you need to see a series of impulsive move and pullbacks. So you need to see a series of higher highs and lower highs, higher highs and lower highs, and higher highs going up and going up and going up. Once you see this series of higher highs and lower highs, all you need to do is be able to connect, if you can find a line that can connect two or more of these recent lower highs here, then you have what is called a trend line, right? So this is called a trend line. So what happens is this trend line works as a support level. So the market, when it comes, it might bounce again here, creating another lower high here, but over time, when the market keeps going, the market is going to break past this line here. Why does it break past this line? Because when the market is moving up, we know that at some point it needs to go down, because the market will either move in an uptrend, downtrend, or sideways. So if the market is moving up, we know that it needs to go down. But how do you calculate when it started going down? We see by the market breaking past this line here. So let me show you in the market how this works. You can see this is Volatility 75 1 minute time frame, right? So you can see we have the market making a strong move here, right? And you can see that by recent lower highs and higher highs, right? Recent lower highs and high highs. So this market is clearly in an uptrend. So if you draw the line that connects this point to this point to this point here, right, what's the next thing that happens? The next thing that happens is the market breaks here. It creates a huge gap here. So if you knew how to trade with the gaps, also this was a very good chance to get into the market. And you want to put your stop loss above this line. So this was broken somewhere around here. You put your stop loss there, and then you take profits. Make sure it's 3-to-1 risk to reward ratio. So whatever you are risking right there, you need to make sure you make 3 times that amount. So if you are risking $1 here, make $3. If you are risking $10 here, try to make $30 from this. As you can see, the market even went even further because the trend line break gives you a very good risk to reward ratio. Here's another strategy. Here's another example here. You can see the market moves once, twice, 3 times. So this trend line is valid, but once it breaks, once the first candle that breaks above here, you need to be buying at that point. So in this case, you would buy at this point right there. You would put your stop loss below the line, right? You put your stop loss below the line, and 3 times the risk is somewhere here. And the market clearly went up and even went a lot more up with this strategy. So this strategy is a very good strategy if you know how to read candle, how to read the charts to draw trend lines, right? So as you can see, 1, 2, 3, in the 4th time here the market broke. So here you were supposed to sell at this point here. You sell here, you put your stop loss inside the line there, and you take profits 3 times the risk. So here you would lose this trade, and I'm showing you also these losing examples because you need to know that you are never going to win 100% of the time, but you need to make sure that your risk is huge, your risk is small and your reward is huge, so that when you win you cover all the losses at once. Right, so let's go back to that example, and I'm going to show you a trick that you can do to avoid getting stopped out here. So let's say you draw your trend line right there, and you see the market breaking up here, right? So if you see the market breaking up here, you can either just go into the market straight away and sell, right? You put your take profits here, you can get stopped out sometimes, or either you can wait for the market to reverse back into the trend line, right? If the market does reverse back into the trend line, that's when it reaches the trend line, you would need to sell at this point here, and at this time you would put your stop loss even above the highest point here, and then you take profits 3 times the risk, or 3 times. If you are risking $3 here, make sure you're making $9 here. So you can wait for a pullback, but there's advantages and disadvantages of waiting for a pullback. For example, here we had a good trend line here, it was broken at this point right there. So you can see we have a good trend line here, it was broken, so you were supposed to sell here, put your stop loss at this point, and you take profits right below here. But if you had waited for a pullback here, of course there is one candle pullback here, but there was no clear pullback here. So there's advantages of and disadvantages of waiting for a pullback or just going directly into the market. So right now, as I'm recording this video, there is an opportunity to enter into the market in with a buy order if the market breaks past this zone right there. So here you can see maybe soon after recording this video, when the market breaks past this zone here, I would buy. Once it breaks past here, I would buy here, put my stop loss at this point, and then my take profit 3 times, or I can just come to this highest swing level here, because once the market breaks past here, it needs to go down to reverse the trend. So this is what is called the trend line break strategy, right? When you are trading this, number one, make sure you are connecting recent lower highs or higher lows, right? You can see there's a lot of examples that I can show you. There's a lot of examples. This strategy is will always give you trades. This strategy will always give you trades. All you need to do is be patient enough, right, to wait for the break. Be patient enough to wait for the breakout of the pattern, right? If you see a market creating a good trend line, we just be patient to wait for the breakout of that trend line. So if you like this video, make sure to subscribe to this channel and click that like button, and I will see you in the next one.